JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 18th of May 2020, so yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, quick update on what's happening here globally in terms of the coronavirus. Now, the situation continues to kind of be the same, I would say. I mean, still everything's rising, infections rising, deaths are rising. So yeah, but recently, as we've noticed, it has been on a bit of a slope to the downside. So yep, let's hope this will stay like this. Let's hope it will continue sloping down. Now then, jumping into a few indices, let's quickly have a look at the German DAX here. Now, I talked about this one this morning, and I was telling you guys to keep a close eye on this downside line, which as you can see now, we've managed to comfortably break to the upside. So all this kind of creates this opportunity for this index to drift further north. But as I also mentioned this morning, preferably we would like to see a push above this barrier here, the 11,235 territory, in order to aim for higher levels. For now, basically, yes, let's continue observing this one, but probably we can get rid of this downside line now, and or actually let's keep it until tomorrow. Tomorrow we'll get rid of it. For now, let's see if the index can stay above this downside line, because again, that's why I don't want to get rid of it too early, and let's see if we won't get any false breakouts here. So if this move is not going to be seen as a false breakout, so that's why, guys, for now, like I said, we'll keep this downside line, and for now, yes, we will be leaning a little bit more to the upside. However, as I said before, still the more comfortable level for us after a break of which we could consider the upside would be this one right here, the 11,235 zone. That's the highest point of April. Jumping into S&P 500 now, here this one is pushing, well, on Friday it pushed nicely to the upside. Last week, as you can see, it kind of rebounded from the this territory right here, this to the 2,798 territory, and yep, pushed higher. And looking at the cash index right now, we can see that the price is currently balancing at around 2,935 mark. So basically not far from this barrier, this one that I kept talking about. That's the highest point of April, and in order to get comfortable with higher levels, we need to see a nice good break above this in order to consider a further move higher. So yeah, guys, like I said, we will be getting ourselves a nice opening gap here to the upside. So all eyes are on the 2,955 territory. Let's see if the index manages to overcome this, and most importantly, will it manage to close a daily session above this? If it does, then yep, like I said, we'll start looking at higher levels. First of all, of course, we'll aim for that psychological 3,000 territory, but above there we have even better levels, like for example this 3,136-37 zone, which is the highest point of March. So keep your eyes on that one. Jumping into silver now, I talked about this one this morning, and look at this beautiful move on silver. So what I was mentioning this morning was, I was saying that in a way we are leaning a little bit more to the upside, and we are going to be aiming for the 17 point, well, we rounded up there to the 60, so 17.60 zone. As you can see, it almost managed to hit that barrier, and that's, by the way, the high of the 9th of March, and almost managed to hit that barrier and then reversed back down. So this morning basically I was saying that we may see a bit of a correction here to the downside. However, to be honest, I wasn't expecting that it's gonna reach straight away this area, but okay, I mean, that's wonderful. Our level was reached, and now we're seeing a bit of a retracement. Don't get me wrong, this could be seen as a temporary correction right now, but still the outlook remains positive. And for now, basically, how we're going to look at this one will be that as long as it stays above this upside support line, this one right here, taken from the low of the 18th of March, yes, we will stay somewhat positive. So keep your eyes on this one, guys. It could be quite interesting. Now, for those who are more on the cautious side, you could wait for a break above this barrier here, above the 17.60 zone, and then aim for higher levels. However, in this situation, probably I would say, if you would like to consider this level as a breakout point, and yes, we will be considering this as a breakout point, but in that case, we would already like to see maybe this commodity reversing back down, drifting lower, maybe testing this upside support line, and then pushing higher. And then this barrier could become quite interesting, because if, for example, let's say if it's going to start pushing higher straight away and without any decent retracement here, and breaks above this barrier, above the 17.60 zone, then in a way this could be short-lived. This move higher could be still short-lived, and it could exhaust itself somewhere around here maybe and then drift back down. So that's why we'll be very careful here. For now, what we're going to do here is probably we'll take a cautiously bullish approach from the very short-term perspective, because overall we're still positive, but from the very, very short-term perspective, we'll see how it performs around here near this 17.60 zone. If this is now going to be seen as a good area of resistance, then yes, like I said, we could aim for a bit of a maybe a decline. However, like I said, keep your eyes on the 17.60 territory. If it still struggles to overcome it, then yes, we will aim for a bit of a correction here, but keep your eyes on the upside line as well. That's why the downside scenario, our downside scenario is from roughly around the 15.84 territory, which is the high of the highest point of April. So yep, keep your eyes on that one, guys. Could be quite interesting. Brent oil, quick update here. Not much has well, the only thing that that happened here is that it continues to push higher, and this is in line right now with our with my analysis which I've talked about in the morning. Basically, we are seeing we could be seeing some more upside here, but only up until here, up until either the 36.10 zone, which previously acted as a good area of resistance, or this downside line. Don't forget about it, because this one's taken from the high of the 8th of January. So in a way, this downside line here could provide resistance, and if it remains intact, well, guess what? We could see another round of selling. But again, from the very short-term perspective right now, very, very short-term perspective, yes, it is leaning a little. We are leaning a little bit more to the upside. However, let's see how this downside line plays out. If we get a break of it, well, I mean, fantastic for the bulls. I mean, we could see this one pushing even further north. However, like I said, we cannot exclude this downside line yet. So that's why we will be very careful for now with the upside. Bitcoin. So Bitcoin, quick update here. And actually, it wasn't Bitcoin that I wanted to quickly touch on, because I wanted to touch on Bitcoin Cash. Now, this one is the more interesting one, and let me just kind of quickly update you guys on this, because Bitcoin, I've done Bitcoin this morning, so the analysis in a way kind of remained the same. So you can have a look at my morning video for Bitcoin, and but for this video, I wanted to touch on Bitcoin Cash. So this one here, unlike other top cryptos like Bitcoin or Ethereum or well, not much Ripple, but those two, the Bitcoin and Ethereum, the Bitcoin Cash is kind of still ranging basically. So this becomes very interesting because well, it's not really following the kind of the trend of those top cryptos, and it's quite interesting to watch. And that's why, guys, for now, basically the same analysis applies that I've done previously on this one. We're waiting for a clear breakthrough one of these sides of this range, either a drop below the 204 territory here or a push above the 280.50 zone. So yep, keep your eyes on this, guys. Like I said, it could become quite interesting, but we need to wait on this one. But if let's put it this way, the longer it's ranging, maybe the stronger the breakout could be. So, well, like I said, patience is gold. Now then, jumping into a few pairs, AUD, AUD JPY here. So something to keep in mind. So we tonight we do have the RBA meeting minutes. So we'll see if there are any updates there, but yep, keep your eyes on that, guys. For now, the technical picture here is a little bit messy, I would say, because last week I talked about this one, and I was kind of leaning a little bit more to the downside. However, what I've mentioned is to you guys that for us to get comfortable with lower levels, we needed to see a drop below this area. So in a way, all this area here where it is currently trading in, so above this highlighted zone and below this downside line taken from the high of the 16th of January, is kind of a tricky one. We could even say it's maybe more neutral. So preferably, in order to aim for higher levels, we would like to see a push above the 17.17 zone. I've mentioned this one last week as well. So this would place the rate above this downside line and would create a new higher high, and yep, it would overcome the April high, and yep, it could open the door towards higher levels. So for now, guys, yes, it is pushing higher, but let's be very careful here and wait for that confirmation break. Either we need to see a drop below this 67.37 zone and then aim for lower levels, or we need to see a push above the 70.17 territory and then aim for higher levels. So that until then, we're kind of just observing this one. Quick update on the US dollar against the Russian ruble. So we're getting closer today. We're on a slide. I've talked a lot about this pair last week and this morning as well, just to kind of for you guys, if you do enjoy some exotic pairs, this is quite a very interesting technical setup. So let's see if this is going to work according to the books, if it'll do everything according to the books. Basically, these patterns, these descending triangles, tend to break to the downside according to all the TA rules. However, as I've mentioned before, we need to see a nice daily close below this 72.63 territory first in order to aim for further declines. That's why, guys, for now we're just observing this one, but the more we are getting closer to the apex, the more it's becoming interesting. US dollar against the Canadian dollar. So here the picture is quite well, it's interesting at the same time. So it could also be forming a possible descending triangle here. However, it's too early to talk about that yet, but basically it's stuck here. It's stuck below this downside line taken from the high the 31st of March, and it's stuck above this key area of support near the 1.3856. So in other words, if it drifts lower, for example, if it falls below this key area of support, as you can see, this 1.40 zone, if it drops below that, then there is a possibility for us to maybe consider a bit of a decline here towards this key area of support near the 1.3856. But if it remains here somewhere, well, like I said, we'll be very careful, and we'll still probably take a neutral stance, and in order to aim for higher levels, well, we'll wait for a break of this downside line taken from the high of the 31st of March, and ideally we would like to see also a push above the 1.4173 territory, which is the high of the 7th of May, or in other words, the current highest point of May. So if we get a nice push above this, this would create a new high for May, and yep, maybe the pair could travel further north. However, again, we are in a very difficult situation here right now, so let's continue observing this, and let's see if the psychological 140 territory will eventually surrender, and if it does, then well, we could aim towards this key area of support near the 1.3856. GBP USD. So quick update on this one. So this morning I talked about this one, and basically I was saying that given the fact that we managed to close below the 1.2163 level last week, so this kind of increases the chances of a potential move lower. What I was also mentioning that, don't get me wrong, we could see a bit of a recovery, which we're seeing right now. However, the question here is, will the daily candle stay above the 1.2163 territory? If it does, well, then we will probably take a bit of a neutral stand. If it doesn't, if it still closes below the 1.2163 zone, then well, I mean, deeper extensions to the downside could be possible, or maybe I would say not too deep. Let's go towards the psychological 120 zone, and then maybe slightly below that, the 1.1934 mark. So at least towards these levels, yep, we could aim. But again, like I said, for now, all eyes are on the 1.2163. Let's see if it closes above it. If it does, then well, in order for us, let's say, to aim for higher levels in within the range, because this is where the pair was trading previously, we would like to see at least a push above this barrier right here, the 1.2350 zone. Sorry, 1.2350, and a nice good push above it would also place the rate above the 21-day EMA, and maybe more buyers could be joining in. So that's why for now we're probably gonna be playing the waiting game. I know it's not ideal, however, we want to be a little bit more on the safe side. GBP NZD. So quick update on this one, and right, so previously last week, in the beginning of last week, I talked about this potential scenario where first of all, the fact that we managed to break this upside support line taken from the low of the 30th of July 2019, that was a bearish indication, but as you can see, last week it pushed higher. However, it failed to move, or should I say, failed to stay above this upside support line. It did get a few brief overshoots, but failed to stay above this upside support line. So this kind of creates this worrying sign for the bulls. And to be honest, now we're still going to be leaning a little bit more to the downside. However, we'll slightly adjust some of our levels, because so for now, what we're going to do here is we're going to grab the low of last week and wait for a drop below it, because this would confirm a forthcoming lower low, then the 2.0124 zone, roughly around there. So, or is 2.0120, we can round it up a little bit here. So a drop below this, or even better, a drop below the 200-day EMA, and even better, a daily close below the 200-day EMA could do the trick for more sellers here. So of course we'll still be very careful then, because we don't want a scenario something like here we had in the end of December, but yep, this could increase the chances of a potential further drift lower. With the upside, it will be quite straightforward. We would like to see well, a push above this upside support line, of course, ideally, and then we would like to also see a push above the high of last week, which is roughly around the 2.0476 territory, and then yep, we could consider slightly higher levels. But again, for now, guys, it is very tricky, so keep your eyes on these two areas here, and yep, let's see where it's gonna go. But however, overall, we're still a little bit leaning more towards the downside, because we are trading still below this upside support line. So but yep, be very careful. Euro and yeah, Euro CHF, something that I haven't looked at for quite a while, but it is quite interesting. So you can see here we are still trading below this downside line taken from the high of the 23rd of April 2019. So this long-term downside resistance line, basically, it is still in play. However, don't get me wrong, it is still tentative because we only have 2 touches here, although it's a nice one to look at. However, as you can see here, this is probably the more interesting bit. So this level here, this territory here near the 1.05 zone kind of really acted as a fantastic area of support and continues to do so. As you can see, over last week, for example, this last whole week, the pair was kind of moving nowhere in a way. It's kind of was really in a tight range, and this morning we had a drop below this 1.05 territory, but the bulls were very quick to push this one back up. And basically, previously what I was looking at when I was looking at this one, I was telling you guys to keep a close eye on the 21-day EMA. So a while ago, a couple of weeks ago, we were here. You can see that we've pushed above the 21-day EMA here. It did climb higher, however, it reversed back down, and yep, we had something similar as we had here back in the beginning of March and in the end of March as well, and then we also had the same story in the end of April, beginning of May. So basically now again we will aim for higher levels. We will keep an eye on the 21-day EMA, because if we get a nice daily close above this 21-day EMA, which is also roughly around the 1.0532 zone, which is currently coinciding with that level, and if we get a nice push above this, then it increases the chances of a potential further move north. However, of course, we'll keep this in mind that something like this again could happen, but still, like I said, still the fact that it's this barrier here, this area here, the 1.05 territory, is acting as a very nice area of support. Yes, this kind of gives a bit of hope for the buyers. However, of course, if this territory breaks and we see a daily close below this, because as you can see, we already saw a false breakout, but if we get a daily close below this, then, well, I mean, deeper, this would confirm it already confirmed the lower low. However, this could increase the chances of a potential further drift south, but that's not the case at the moment, it seems like. But in order to get a little bit more comfortable with higher levels, we need to see a push above the 21-day EMA. So keep your eyes on that one, guys. And finally, Euro USD. Here the situation is very nice for the bulls as well. The pair is pushing higher. However, still the same analysis, the same idea remains. As I mentioned earlier, we need to see at least a push above the 1.0875 territory, and ideally we would like to see at least a daily close above this area. And then, yeah, we will aim for slightly higher levels within the range, because don't forget that the pair is still within the range. As you can see, this area here, the lower side of the range, near the 1.0777 level, that area continues to provide fantastic support. And now the pair is trying to make its way higher. However, it's currently getting a hold up near the 21-day EMA. But as I said, if we get a nice daily close above this 1.0875, then yes, we will aim for the 1.0990 level, which is currently the which is around the upper side of this range. So guys, I really hope you found it useful, and yeah, thank you very much for watching and listening, and like I said, I hope you have a fantastic evening, guys. Have a well, stay safe first of all, of course, both market-wise and health-wise, and I really appreciate your time tuning in to this webinar, and yeah, I hope you found it useful. And if you want to catch my video tomorrow morning, as always, my Trader's Espresso, 6 o'clock GMT time. But for now, have a wonderful evening, guys. Thank you very much, and bye-bye.